Even the S&Ps open up the week nudging lower, but do trade back to unchanged, hovering at 55.50 towards the end of the session. Market kind of waiting for that next catalyst event. Could it come this week via jobs and earnings? Both are going to be headlines for a majority of the week. Ultimately, though, taking a step back, we've seen equities rallying over the last 4 to 5 days, a lot of that coming on the heels of rising rate cut expectations. Right now, the market's pricing in 425 basis point rate cuts between now and January of 2026, helping to fuel the move higher, despite the fact that there remains a lot of uncertainty, whether we look at earnings, whether we look at trade, or whether we look at other rising geopolitical risks around the globe. So ultimately, equities right now kind of rallying, but cautiously and waiting and watching, again, hovering at 55.50 today, very close to unchanged where we were on Friday settle. Now, what does this mean for volatility? Well, volatility typically moves inversely to the equity indices. So as we've seen the equities rally over the last week or so, we've seen volatility come off those uber highs. Now, volatility's been on a roller coaster since early April as the onset of tariffs and trade. But ultimately, today we saw volatility remains quiet, basically trading unchanged as the underlying indices were unchanged as well. Lastly, let's talk about what we have tomorrow. Tomorrow's Tuesday. We do get some housing data. We get the JOLTS data, the first installment of this week's jobs data. We also get consumer confidence, and then we'll get a slew of earnings with some pretty big names, and those will pretty much tie up the market for much of the day. One thing we will not get tomorrow is any Fed speakers, as they remain in their blackout period ahead of next week's May FOMC meeting.